Disclaimer. Disclaimer again. 9 to 5, nah. Let's talk spiel. This is the finance Duke, and I'm gonna teach you how to sell puts and how you can be a profitable trader in the stock market by just selling puts and while still keeping your 9 to 5 job. So, what our main goal is to make the money work for you like a second job. So, in stock market and in life, everywhere, it's better to be a salesman everywhere, right? So whenever you want to get a job, what you're basically trying to do is you're trying to sell yourself to the interviewer, the employer, right? So just like that in the stock market, if you want to make the most, you better be a salesman that rather than a buyer, right? So in this strategy, you're gonna sell the right to own the shares at an agreed upon price. That's called selling a put. On the other side, if you're buying the put, you're buying the right to sell the stocks at an agreed upon price. That means the strike price and by a fixed date. That's the expiration date. This is a great strategy. Anyone can do it as long as you have the prerequisite, which is some great capital and some guts. So yeah, let's get started. The salesman mindset, which is like you don't need to quit your job to make money in the stock market. You just need to think like a salesman. Whenever the stocks are selling off in the market, that's a great buying opportunity in my perspective. So if you can sell a put and get a discount on the entry price, and which is gonna lower your cost basis, you're gonna collect a premium to own the shares. That's basically how selling puts work. We'll get into it in more detail in another video, but this one I'm gonna keep it quite short to the point. So you just need to think like a salesman. Instead of selling products, you sell options, contracts, and collect cash. The best part, you don't even need to own stocks to start. Exactly. That's how selling your puts works. But however, if you're selling calls, you're gonna need you're gonna need 100 shares as a collateral. On this one, you're gonna need cash to put up front as a collateral to the broker. So selling the stock market without stocks, just think about it. Imagine a guy selling exclusive event tickets before the price drops. He gets paid upfront just for offering to buy them later at a discount. If the price never drops, he keeps the cash. If it does, he buys them cheap. This is what selling put options does. Why now is the best time to own the stocks? I believe that now is the best time to buy the stocks. Stock market is having a correction. It just had a 10% correction, and every time it corrects, it might turn into a recession. I don't know, but all I see is an opportunity. Stocks are at a 10% off discount. Hey, I'm jumping on that offer. I'm taking it. Right? That's my mindset. The stock market has been beaten down. The fear is high, which means option premiums are big. Traders are desperate for downside protection. What if the price falls even down, right? That's when they buy put options. But however, you're trying to own the stock, right? So even if you end up owning the stock at a higher price than the low, owning the stock and it goes down lower, that's fine for you. There's another strategy for you at that time. It's called cover calls. We'll get into it. So if the stock recovers, you keep the cash. If they drop, you buy at a discount. Simple strategy, guys. Now, how to sell puts in 4 steps. You need to pick a stock. When picking a stock, it's quite important that during this time, when the markets are correcting, that you go for a large cap company. Large cap, like something like Tesla, Nvidia, Apple, Walmart, stocks like these that has cash flow and cash on hand, such and such. That's just my opinion. That's what has been working out. Let's say, for example, if you do end up owning the stock at an agreed upon price, but you gotta make sure you're owning something good, right? So for that reason, so sell a put contract. This means you agree to buy if it drops to that price. Collect your premium. This is your paycheck just for placing the bet. Yeah. and wait for the expiration. If the stock stays above your stock price, you keep the premium. If it drops, you buy at a discount. And why this works with the 9 to 5? You don't need to sit in front of a chart all day. Haven't you seen all those traders on YouTube? They just sit all day long on the computer, just staring at some charts and predicting where the price will be the next 5 minutes later, 15 minutes later. I don't think that's gonna do you any good. Just sitting on the computer watching the screen all day long. When you're busy at work, whenever you have family around. So this is passive income. You just place the trade and let the time do its thing. You're getting paid for just being willing to buy the stocks at a good price. And it's quite important that you do the strategy and stocks that you want to own. Because it's highly likely that you will end up owning the stock if it drops below your strike price. So a few trades a month can add hundreds of thousands to your income. So what's the catch? Like I said before, if the stock drops too much, you have to buy it at the agreed upon price. If the price is $100, right, and you agree that you own the stock at let's say 95 and it drops to 85, you still have to buy at $95. Only sell puts, that's why I keep saying only sell puts on stocks you actually want to own. What's another requirement? You need collateral. More the better. Look, bro, you already have a 9 to 5, so why not make your money work a second job? Selling options is how you become a salesman in the stock market. It's simple. You're not gambling, my friend. You're running a business. Sell puts, get paid, build wealth. Simple as that. It's like selling insurance, right? It might happen one day. Hey, you can still need it. But if it does happen, we'll take care of it. It's like that. And Alex Hormozy said once, opportunities only look like opportunities in the rear view mirror. Today, they look like risk. Totally does. Tesla beaten down 50% from the highs. 50 or more, I don't know. I need to check. But 50% or more is beaten down. But nobody wants to buy it now. Everyone wanted to buy it at around $500, right? But now is the time to buy. Stocks are at a discount. Best time to buy is now. So now let's see all of this in action. This is the Tesla stock option chart. Tesla is currently trading at $273.22. And if I do want to own 100 shares of Tesla, I would need at least $27,000 cash in my brokerage account to own this. But however, this is a small account, and I want to show you guys what's possible even with a small account of $1,000. For that reason, I'm going to go and choose TSLL, which is the 2x leveraged Tesla, which means if Tesla moves 5% on the day, look at these numbers, all right? These percentages, 0.66. TSLA should be around 0.33. Nope, that's not the one. TSLA. Damn, this thing's giving me a hard time. 0.3. See here? This is the double. TSLL is a double. Whatever happens on Tesla, it happens twice on this. But another key important thing to keep in mind is that this leveraged product has in time decay. I think it's time decay, but something over time, if Tesla consolidates longer in these prices and Tesla makes a move, it might not make as much move as Tesla does. So that's one thing to keep in mind. So we want to be in this whenever Tesla is making the move. But however, I do want to own the shares at 10 because I do. Look at the discount. 40 to all the way around $10. That's a huge discount. And in my opinion, now is the time to buy. By no means this is a financial advice. This is something I want to purchase one day. And I want to own 100 shares of those. So for that reason, I'm going to go to option chain. Simple. I already did enter a contract for $10. $10 strike. As you can see here, it's currently valued at 14 cents. 14 times 100 shares each a contract. So that's $14 collected in premium. Let me show you guys what's happening to it. Oh, not that, sir. That's the one. So I collected Let me show you guys something better like that. It got 1 day to expire, right? That's expiring on the Friday, March 28th. It is currently trading at 10.57, $10.58. This is the Robinhood Classic. This is where you can see the Tesla put option values, right? At some point, this was trading around 4 cents. I could have closed it and keep 13 and give back $4. I didn't want to do that. I don't care if I still have to own the stock. I'll buy it. So for that reason, I kept it open just one more day. Whatever happens, whatever happens. Trump is set to speak tonight at 8 p.m. I do not care what he has to say. I'm going to own the stock. That's my mindset. So for that reason, here we are. Let's just to show you guys, if the stock remains as it is now, by tomorrow around close 2 p.m. or 3 p.m. on here, hey, we're going to collect all of the $13. Like I said, let's say the stock does go down, all right, 954. I'm not going to make a loss. Yes, you heard me right. You heard me right loud and clear. This is misleading, guys. This is misleading because I'm going to own the stock at $10 when it's trading at 954. That's what it's showing and saying. Once I own the stock, it'll show in my account that I have 100 shares of Tesla, TSLL at 10 each. So once it drops below 10, what I'm going to do is I'm going to go to the option chain of TSLL, go and sell the covered call at 10 or 11 for the next week. It's usually going to be around here for tomorrow. I'm going to sell at 12. So if the Tesla does drop, keep on dropping, I'll keep my 50 by April 4. If it does go up to 12, what I'm going to do is I'm going to sell my shares at $12 each. That's what it's basically saying. This is something you want to do once you own the stock. That's my plan. So for that reason, that's it. And this is where we are today on our account. We opened this position was technically in a loss, but it's not a loss. I still wouldn't consider it as a loss because it's not realized. Unless I sell my stocks. I own the stock at 10, I sell it, it's 950. That's a loss. That's a $50 loss because I have 100 of those. But however, what I'm going to do is I'm going to keep it simple. And go ahead and sell $12 call options. I'm going to collect $50 for that. And once it does go to 12, hey, I'm selling my shares. Simple as that. I'll be sad to let the shares go, but that's okay. I'm going to do it all over again. Start over. Maybe I may not be able to sell at 10 now. May need to sell 11 put options. But if I want to sell 11, I would at least need what? $1,100 in my account. Let me show you guys how much collateral is used for this position to open. As you guys can see here, this is my account. This is where we started. Then we had a $5.32 in a referral. Then it went up. This is when I entered the stock put option contract. It was in profit. Then it went all the way down $17. Again, that's not a loss. That is not a loss. I repeat. That is not a loss. $1,000 in collateral. I collected the $13. After all commissions, I collected $12.94. Simple. It's a simple strategy, my friends. Simple. Keep things simple, and also run a journal for this. Let me show you. This is the $0 to $10 challenge account. I already hit my target, 10. That's it. Next is going to be 100 after the Friday close. I'm going to update that soon. Anyways, I've sold my put options of $10 strike, one quantity. I only had $1,000 in the account. I can only do one. That is totally okay. Hey, you always have to use a capital that you're okay losing with. That's my mindset. That's been my mindset for whenever I'm in the market. You only can use a capital that you can survive without. Simple. Let's say if you have $10,000 in with you, and you're gonna enter 10 of those. But tomorrow, let's say the stock does drop to 950. You have to own those shares, but the day after tomorrow you have a bill to make about $2,000. What are you gonna do? You're gonna sell your stocks at loss now. You don't have the time for the stock to do its own thing and come back and recover it and come to profit. So for that reason, whenever you try to make $129 in profit, you ended up losing, right? You had to sell your shares at 950, and you had to make what to make 2,000. So that's selling at least 2 contracts of calls, but it doesn't make sense for you now. So yes, I always say do not use the capital that you want, that you need. Put money away that you can live without. Simple. It's quite simple. Strategy is simple, guys. So I can live without $1,000. I can make that back in next month from working, right? So I'll put another 1,000 into your account. Simple, just like that. So I'm just going to sell this. I got this a huge shout out to some. I found this online, this journal. I mean, it's amazing how it's already set. If I just go to click and drag and put the numbers in here, it's gonna easily put the numbers for me. Say collect about 50 cents, one quantity. There you go. It does all the math for me. If it's a buy order, I make a $50 loss. If it's a stock investment, because it's now 100 shares, yes, that's why it's 50 cents loss. So it's quite simple, guys. Hope you guys learned a thing or two today, and make some good choices, my friends. This is just the beginning of a great challenge. I'm gonna show you how I'm gonna make the next $100 within probably the next month, and after the next month, and after the next month. By the 10th month, I already made what $100. Oh yeah, $1,000. Whatever I started with, that's 100% return in 10 months. I beat S&P 500 by then already. This is great return on capital. I don't know about this math though, because it's only 1.3% of the collateral I put out. That's it, guys. Make some smart choices.